Tyler, a company we've been talking about a lot here in the past few months, Emcor, well, the stock got DeepSeeked this week, down 17%. But there's some good news and a bigger context about the company that I think investors are ignoring. You ready to talk about the real story with Emcor and what investors need to know?
Can we make DeepSeek as a thing? Like, how long do we
Yeah.
have before we can trademark that and it's still relevant?
We have a mission. I've already submitted the trademark to the USPTO. So that has been submitted. Hasn't really been submitted, but we're going to start right now on making that happen.
Good. Yeah, this is a wonderful company. I love talking about it. And hey, if AI gives us a reason to talk about it, let's talk about it.
Yeah, and it might be giving investors that don't own any or have been thinking about adding more, maybe an opportunity to add a little bit more. I'm Jason. This is Investing Unscripted. We're going to talk about Emcor and what's going on, but if you're looking for even more great stock ideas, go to our special link. Go to fool.com/unscripted. If you go to fool.com/unscripted, you can get access to the Motley Fool's 10 best stocks to buy now. Go check out that link. Okay, Tyler. So again, 17% haircut roughly in between Friday's closing price and where we are here middle of the week on the information about DeepSeek. The short version of DeepSeek, for those who haven't been following too closely, is that it's an artificial intelligence, an AI, an LLM that came out. The news has kind of been coming out in fits and starts over the past several weeks, really, since the release was first, the most recent release of DeepSeek came out, that it's performing almost as well as OpenAI's most recent release. And these are two of the few, there's only a handful of these generative AI products that have the ability to reason, actually come up with their own answers versus finding the answer in the data that it's been trained on. And then, of course, the big piece is that this version of DeepSeek was supposedly trained for less than $6 million. That hasn't been verified, but what we do know is that it's an exceptionally good AI that was trained on much, much cheaper, lower tech GPUs from NVDA than everybody else is using. So Emcor and every other company that's directly or tangentially related to the growth of spend for AI took a shot. What's Emcor's business and where does it fit in the puzzle here?
Emcor is one of the nation's largest electrical and mechanical contractors. So if you're trying to build out anything, whether it be a building, whether it be transmission lines, whether it be any major construction that involves electrification.
Oh, you mean like a
HVAC.
data center?
Oh, yeah, like data centers might be a big thing. They're a pretty big component of that. Trying to square the circle here of how do we get from AI LLMs that are cheaper to an electrical and mechanical contractor dropping about 18%. I think the thesis being is that, we thought that AI data spend was going to be massive, spending on lots of data centers to satisfy the voracious appetite of the existing models we're using in the United States today. This release of the DeepSeek model kind of questioned if we needed that much and whether these new models could be more efficient, less power demanding, which requires less compute power. Less compute means fewer data centers, which means less future business for Emcor. So I think I drew the line. Did I miss anything?
No, I mean, I think that's really the core. I'm going to share on the screen that this is not a stock that was any kind of hidden or secret winner of the AI boom. I mean, maybe there's a lot of people that don't really know very well, but I think investors in the know have certainly been investing in Emcor is part of the future of technology, more data centers and all that. So you see the stock price is up. We're looking at a little over 3 years now. Stocks tripled and then another 46%, 246% in returns is really, really good. Revenue's up 43% and earnings have well more than doubled over that period. So the company's growth, its expansion, and part of that is tied to technology and data center expansion. A lot of projecting that growth opportunity was going to continue. How true is that? And what's not completely accurate about thinking about Emcor's long-term potential?
It does have growth potential tied to AI. And I'm not going to say that it's completely going away.
Tyler, somewhere around half of the cost of a data center is electrical and HVAC, things that are right in Emcor's business, right? So it is a pretty sizable chunk of that pie.
At its most recent third financial results, which were third quarter, it's been a minute since we've seen financial results. But back then, they were estimating that its network and communications division, which was kind of the segment where it would host AI data centers, hyperscalers, things like that, they were expecting somewhere between 25% sequential growth, 55% year over year growth for this particular part of the business, which it's substantial, right? But it isn't the entire story at the business. Just to give you an idea, they give what is called remaining performance obligations. It's like backlog for electrical and mechanical contractors, but specifically for like big jobs that last more than 1 year.
Anybody that follows the software business, you see RPO there as well, right? Because companies will sign long-term contracts for software as a service. It's a service, just like the services a mechanical and electrical contractor will provide. So it's anything that's more than a year out, right?
Yeah. And so in its RPOs, it has about $10 billion worth of remaining performance obligations. About 20% of it was tied to this network and communications part of the business. So, it's a sizable thing, but it is not the largest component, and kind of goes to show the diversity across not just AI, but a lot of other trends that we've been seeing in the United States. I know we've been using AI as a hook to talk about Emcor types because people are interested in it. But if we're talking about this business, it's also trends like reshoring and nearshoring of manufacturing, electrification and the growth of electric vehicles, as well as some general like energy efficiency projects that you see in buildings. There's quite a few kind of tailwinds, if you will, for this business outside of AI that hints at like, yes, obviously we're going to see, perhaps if we were to see a major slowdown in its network and communications, or because we have fewer data centers getting built out, it doesn't necessarily mean that this business is headed for the toilet, right? There's a lot of other levers it can pull, and it goes to show that maybe valuation is always sort of a tricky thing, but 18% in a day because of demand a couple of years out for one division of the business might be viewed a little bit as an overreaction.
Yeah, I think that's particularly the case when we see Emcor continue to use the playbook that it's used for years to grow and create value for investors by becoming a larger, more strong cash flowing business. And the recent one, this was about 2 weeks ago, they announced the acquisition of Miller Electric, $865 million cash acquisition, a business with enough cash in this environment to make an acquisition that's worth roughly $865 million. It works out to a little less than 5% of the company's market cap. They're adding a business that generated $800 million in revenue last year. So it's a nice bolt-on. And you see geographically here, it's largely Sunbelt and Southeast. And the company says that it does about 90% of its business in Florida and the Southeastern states. So that's an area that Emcor actually doesn't have a substantial presence already. So now Emcor geographically has moved into this area where, oh, by the way, Tyler, the demographic trends are really favorable. Employment is growing in these areas. People are moving. The migration trends are favorable for those areas as well. So we see a business that's positioned itself for some other secular tailwinds that should be really good for this sort of business, right?
Yeah, and reinforcing that point of like the AI and data center is the death of electrical contractors. It showed its revenue breakdown, about 25% of it is related to data centers at this new acquisition, Miller, which is a little bit heavier than Emcor, but at a 5% of Emcor's size, it's not really going to change the percentage breakdown of its revenue, if you will. But and hints at the idea of like there are going to be levers to pull. This is another way that it can grow its business substantially while adding value. Emcor is one of those, I'll call it one of the rare exceptions that seems to know how to create value from mergers and acquisitions versus the multitude of others that seem to do it so spectacularly wrong. So I don't know. There's part of me that says this Miller acquisition is probably more important to the bottom line than the DeepSeek scare.
Yeah, I think you're right. Let's have a little fun here and let's talk about Javon's paradox. You know about Javon's paradox, don't you? Don't you, Tyler?
Everybody's an expert in Javon's paradox all of a sudden because we had a cost and usage debate within 24 hours of DeepSeek. So yes,
I do want to talk about the implications for a business like Emcor because I think it's important. The knee-jerk reaction is we're overbuilding data centers for AI. Right. If we can build LLMs that are far more efficient and don't need the levels of compute that we've previously required or that was previously thought would be needed, we're overbuilding data centers. What Javon's paradox says really simply, for those that don't know, is that the commoditization of something that's useful generally drives the use of it up. When something gets cheaper and it's useful, it gets used more. And for something like software, which is what AI is, the cheaper it gets, And the more of it that gets paid for, you don't have the same, you're not manufacturing a widget, right? Where the lower selling cost of that widget, you still run into the hard realities of the costs of the goods sold. Costs of goods sold are a much more minimal thing and a fixed cost versus a variable cost with something like software. So what that means is that if this is a true breakthrough and a sea change with what DeepSeek showed to be able to train these LLMs with and have them be very highly functional with far less compute resources, over the long term, that's probably a bigger tailwind than the potential short-term headwinds that we could see. So I think investors that are seeing this as only downside for a company like Emcor are missing the longer-term, bigger picture that we could need even more data centers and more compute power more quickly if we start seeing more AI that's more capable and more affordable and more accessible. So I don't know how it's going to play out any more than the experts that were completely blindsided this are going to be. But I think the key is that a company like Emcor is really good at positioning themselves to be a go-to, one of the largest main go-tos for this sort of work in North America. And I think this is an opportunity to buy.